So this is a video about the RSI, the relative strength index, and this is how it looks. I want to actually remove it for now, and then we'll talk about how to include it and what it means. But first, let's take a look at the formula. The relative strength index is actually calculated through a formula, and I just basically Googled it and using the TradingView's explanation of what a relative strength index is, and it is a formula. It's 100 minus 100, 1 over S. It's an average gain of N days up, an average loss of N days down. And it's a very simple, yet, in my opinion, very powerful technical analysis tool. And again, it's based on perhaps a little bit different than the moving average analysis tools that we've talked about so far. But it is more about the number of days, the price is going up and how much you've earned on those up days and how much, you've lost on those down days. So a little bit more an accumulative side of pricing. So on the trading view that I used SPX, and I'm just going to go to indicators and type in RSI. And the first one is the relative strength index, and I'll include that. Now, again, very similar to all the technical tools that we use, you can actually use different settings for this. So with the settings, again, you notice how we have the moving average and we have the RSI length. And again, what I want to do is 50 days, usual. Actually, I'm sorry. Keep the RSI length 14 days. Those are the days that we look up and down days, but I want to keep the SMA length to 50. But again, the calculation of the RSI is not based on the moving average. It's just it draws a secondary line right here. That's the 50 days, so that you could actually look at it how the RSI deviates from that 50 day. But RSI is a calculated function, so because it's a calculated function, it gives you a number between 30 and 70. And usually when the price or the calculated RSI based on the price is within that 30 to 70 range, we say that there is no RSI signal. And if the RSI is above that range, we call it overbought. And if the price is below that range, we call this oversold. Very similar to the Bollinger discussion that we had. This is not about whether there's a signal to buy or a signal to sell. It's always about how the market is perceiving the price to be. So if the price is perceived to be too high, too fast, then we say it's overbought, and that doesn't mean that it's going to have a correction. It just simply means that it may be harder to continue that pace of going up at that speed. And sometimes you may have a correction, obviously, but I wouldn't count on it. And the same thing with the oversold sections. It doesn't mean that there will be a correction, even though in our example here that we actually do see immediate corrections, but it usually means that the market's perception, investors and traders' perception is that the price went down too fast, too quickly, and it may continue going that, but it's usually harder to continue at that pace, at that speed. So, because this is a calculated function, it's usually that range that makes it so easy for RSI. You just include it, and then you look at when the price was actually above that range, or the RSI was above that range and RSI was below that range, and calling this is quite easy. So let's take a look at a few. If you look at, say, Apple, notice that for multiple days the RSI was actually above that 70 range, and it was overbought. But just because it was overbought does not mean that it will have a correction. Just price kept going up, and very similar to the previous technical analysis tools that we discussed, along with the price changing, the RSI also adjusts itself. And therefore, as the RSI moved, or as the prices move, RSI also moved with it. So very similar to chicken and egg discussion that we had for Bollinger Bands or moving averages, very, kind of endogenous feedback going from the price to the, to the RSI, and then to the, or RSI to the price. So let's take a look at another one. This is Boeing. And again, notice how we actually have a very oversold territory. And just because it's oversold doesn't mean that it's going to have a correction. And in fact, notice, even though we have a correction right here, it's a very short-lived one. It continues to go down. We had a few days of overbought territory, but the price continued steady. So just because it's actually going, the RSI going above that range of 70 does not mean that you will have an immediate correction. And just because we're down all the way down to 18 doesn't mean we're going to have an immediate correction. I think that I want to also look at Disney, which has been significantly down for the past year. And notice though, even though the price have been falling, the RSI is within range and we have no signal. Even though, I mean, even if you look at it, say, multiple years, we have, areas where, we do see the oversold territories and overbought territories. But overall, for the past year to date, since the April of this year, the price has been within the RSI band and therefore no RSI signal. So let's take a look at a few more. JP Morgan Chase, I think I wanted to look at on this one. And with this one, let's take a look at it this year to date and notice that we have a huge, overbought with a little bit of correction this time. But, and after that, we are within range and therefore no RSI signal. And, up until the midsummer, the price had been quite within range for the RSI, and therefore we didn't have any, RSI overbought or oversold signals. So thank you for working with me, and I'll have more on technical analysis. And please let me know if you have any questions. Thank you. Bye now.